You should be preparing for war in times of peace. We're not technically in a recession, but shouldn't you be preparing for one? Like, shouldn't you be preparing for hard times? Because we don't know what the future is going to hold. So why would you not prepare today for an uncertain future? So in today's episode, we're going to discuss how most people save money in accounts that don't really serve them, especially in a time when they need it most, right? So we're going to talk about how you can provide liquidity in hard times and how prepping during peace is going to prepare you in times of crisis. So Jason, we've all talked about the many different ways that we can use infinite banking here, not just as an opportunity fund, but if we kind of go back to my origin story about using this during COVID, right? And in a time of crisis. A lot of folks, they were ill prepared and they thought they could tap into, home equity lines of credit and 401ks and different accounts. But what is the one account that you and I know and love, the one asset class where a lot of people end up saving for the rainy day fund?
Welcome, 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 Jeremy. What a way to start the show. That was a lot of words. That was a lot of words for everybody listening in the car, at the gym, wherever you are. All we're talking about is there are going to be events. I always ask Jeremy, I'm not going to do it to him right now, but I always say, hey, man, what's the one guarantee in life? And it's change, it's events, and it's cyclical. It's been this way since the early 1900s and probably longer, where every 6 to 7 to 8 years, there's a big change. But guess what? We all have personal changes too. We all have events that happen. Anybody ever have a car breakdown? Anyone ever have an air conditioner in their home or their car? If you live in Florida, whoo, both, man, you might as well get a hotel. But have you ever had a medical emergency? Ever had a kid break a bone unexpectedly at the playground and you need attention? You need to go to an emergency room? Life happens. It's a bumper sticker, I believe. Life happens. And when it happens, do you want to be caught with your proverbial pants down? Or would you like to feel in control? And would you like to have your energy feel balanced because you knew you were ready for this moment? So, to answer Jeremy's question, to bring it full circle, we love our privatized banking. We love our infinite banking policies that have been specially engineered for each of us individually for just this case that we're going to talk about today.
Yeah. And where do most people keep their savings, right? Traditional banks. We're talking about doing the exact same thing, but in a system that you can control, right? But the difference is when you fund your personal banking system, you're able to get multiple forms of interest. You're able to create multiple asset classes inside of your own privatized banking system. Traditional banks, the Wells Fargo, the USAA, the Chase, those guys are going to give you a meager, measly interest rate of what, 0.01%. How about this, Jason? What about, well, Jeremy, I have mine in a high yield savings account.
Mm. We
Variable,
hear that one a lot, don't we?
we do, but it's variable, right? I have,
What? No, it's not. It's 4.5% because it's online, Jeremy. What do you mean it's variable? What do you mean? What actually, what do you mean?
yeah, it just changes monthly, right? So it can be 4 this month, it can be 3 next month, it can be 12. It's variable. It's not a good average. I did talk to one of the major carriers that you and I like to work with, and I just coaxed it out of him. I said, "Hey, we have these guaranteed rates inside of the policies, and there's dividends by becoming a fractional ownership of owning these sort of policies inside of a mutual carrier. Over time, over 100 years that this company has been around, what is the quote unquote guaranteed rate if you factored all this in?" You know what he told me? Like, this kind of actually astonished me. 7.75%.
What? For real?
Yeah, 7.75% is the if you were to look at the interest rate and the dividend combined over 100 years, what they're looking at is that's the average that they end up getting inside their privatized banking system.
Wow. Wow. That number shocks me, folks. For anyone listening, and again, Jeremy, you're a really smart guy, and you're using a lot of really big words. So when you talked about what we're talking about is when you apply to have your whole life insurance, right? Your whole life income policy that's specially engineered by someone who knows what your goals are. What where you want that to be is with a mutually owned dividend paying whole life company. And like Jeremy mentioned, they've all been profitable for 100+ years consecutively. And to be what Jeremy said, to be a fractional owner, it just means that you're number one in line. You're actually an owner in a mutually owned company once you're approved, once you've gone through underwriting, once you have a plan in place. And that is just the beginning of the journey, right? That's just the beginning because now you are the banker, and banking's a verb. But what Jeremy's saying is this executive at one of these mutually owned companies that's been profitable for the last 119 years. I believe that's the one he's talking about. And the average return has been like over 7%. And Jeremy, this is such a relevant topic today for our listeners because we're not in a recession, but aren't we? You're on the phone every day. Tell me how people are feeling right now about the economy, about inflation, about taxes, about the market, about all of the things. And I feel like we all take on enough risk in our life. We all are, as Americans, it's like it's in us to push, to grow, to add more value, to do more things, to take more on in every aspect of our life. Where do you feel certain? Where do you know that no matter what, this thing that you have in your tool belt is going to perform exactly like you expect it to, if not better? What Jeremy just said shocked me. So sorry to go on and on, but like that shocked me. I did not expect that number to come out of your mouth. I was expected somewhere in the mid fives, to be honest.
Yeah. Well, again, he did include the dividend that's inside of that number, which, as we all know, the dividend's not guaranteed. But that's the reason we like these carriers. They've been around for well over 100 years, giving a dividend every single year. So when you factor in the guaranteed rate plus the dividend, that's why he said 7.75%. The the important thing is to answer your question, uncertainty, right? That's where people they don't know what they don't know. They don't know what the future is going to hold. Um, things that inability to predict what the future is going to be is what creates uncertainty in people's lives, and that's why I like to reiterate, even though that is a high interest rate that you're getting inside of these policies over time, this is not an investment. This is a guaranteed savings vehicle. Does it have investment like properties? Absolutely, right? It certainly does. But it's a guaranteed form of liquidity, and you prepare for war in times of peace.
Mm,
Sink in. You should be preparing for war in times of peace. So, right now, as Jason said, we're not technically in a recession, but shouldn't you be preparing for one? Like, shouldn't you be preparing for hard times? Because we don't know what the future is going to hold. So, why would you not prepare today for an uncertain future?
that's it. Winter is coming. Just think about the seasons. I mean, I moved to Florida a while ago because I had enough winter. But winter does come and it comes consistently and persistently. And just think about what the animal kingdom does when winter comes. Actually, before winter comes, what do they do? What do ants do? What do squirrels do? What do, animal bears do? They all get prepared. They all prepare ahead of time, whether it's in the summer, whether it's in the fall, but they're getting ready for winter. So that way they can weather the actual storm. And it is coming. We don't know when. I mean, you can go listen to all the talking heads in the world. I dial into some of the ones I really trust and I hear what they're saying, talking about inverse curves and this and that. And yeah, I think it's all cool, but it's forecasting something that is inevitable. So they are just guessing. It's the best guess of when this might happen by looking at markets, looking at the economy, looking at all the different things. But at the end of the day, winter will come. And for you,
Yeah,
it
I
might
mean,
come in the fall, it might come in the summer, it might come in the spring because you might have that emergency event. And if you're not prepared, well, guess what? That means this is the other side of it. That means where will you get your money from? Oh, I know. Jeremy, I bet you know too. You can go down to the mailbox and you're going to have 8 to 12 letters every day offering you lines of credit, personal lines of credit, credit cards with 0% interest, and they all look nice. My son Connor is always amazed how nice some of these, some of these offers look. He's like, wow, look at this Amex one, Dad. This one is super fancy. Look at this one from Capital One. This one's the best. Look, it's 18 months. It is a trap because our behavior when we give away, we've just signed up and Jeremy, you're a good looking dude. I think I'm all right looking, right? For anyone listening that can't see us, just trust us. We're not bad looking. And when when you take on this because they know our behavior, the reason they give us that little noose to slip our head into is because we have a need and they're like, "Oh, I'll help you." But now when you make money, you're going to give me more of your money. And then when the next event happens, you do it again. And then you do it again. And then you do it again. And eventually, if you're like 95% people, none of you guys, nobody listening here, but if you're like the other people, not you, then you end up working just so you're paying interest and money to somebody else to have the things that you need. And you feel like I'm working harder, I'm working longer, I'm taking on more risk. And it brings us back to the risk point. If you were prepared, if you did a little long term planning and you just said, you know what? I wonder why these guys are so passionate about this. I wonder why they're taking the time to put a podcast together. I wonder why they're taking the time to bring the real stories from the real people they're talking to and from their lives, like your life, like Jeremy. Like, this is the perfect example. We've talked about this before. You and I don't know if it's been on a show, but you've had kind of winter in the middle of summer, have you
Hmm.
not?
Yeah, yeah. I'm having financial um, crises right now, right? With the tenant issues, with replacing AC units, with my car. At the same time that I was trying to multiply my wealth by doing ground up developments. And if you've ever done a ground up development, it's very costly and it's very time consuming, right? But kind of bringing it back in, where's some other places that people typically look at holding their reserves? Like, talk about
Mm,
investments. Some folks will say, well, I've got this 401k. I got this IRA. Hey, I can tap into my home equity, right? Well, you can't sell part of your house, and you definitely don't want to lock in losses when it comes down to the market being down, right? To tap into your emergency savings. They should be distinct. They should be separate. They really should be. And so for anyone who's going out and trying to multiply wealth, but also saying, hey, you know what? In the event something happens, I have this portfolio that will help cover my losses. Well, keep in mind, if something happened in a crisis, the market's probably down. You're going to have to sell at a loss to then turn around and go to survival mode to get you through the winter times.
mm.
This is not a very, um, I don't want to say safe, but it's just not a very smart way of doing it, right? You can have your cake and eat it too. We already said the policies in and of themselves are a bridge between saving and investing. It allows you to save, it allows you to have liquidity, it allows you to have uninterrupted growth, while at the same time moving the money to multiply your wealth or or use it in the event that you have a rainy day. Like that's why I like it. You have opportunity and you have optionality.
Well, two amazing points, Jeremy. Thank you for sharing that you just brought up. One, when you're talking about a home equity line of credit, when you're talking about a high yield savings account, when you're talking about maybe borrowing against your stocks in a margin account, or you're talking about having your money in a qualified plan, the question is, are you, actually, the question really is, who's in control of each of those accounts? Is it
Yeah.
you?
Well, if you want to get a HELOC, you got to go through underwriting. You're going to have to request permission. There's a lot of things that are outside of your control. The stock market, you don't control that. It might as well be called the Wall Street Casino because you can make people make money in Vegas, right? There are day traders who are successful, but more often than not, if you're not consistent over time and you don't cost dollar average, the casino is going to win. And by the casino, you're going to still pay taxes on all of that. That's the other thing I like about our system is we can access it tax free. But there's just certain aspects of where you warehouse your wealth, where you have your emergency rainy day fund. Those
Mm,
sort of things should be guaranteed. You shouldn't have to worry about where am I going to Where am I going to get this money in a time of need? Do I go, like you said, to Capital One, open up that letter that was in my mailbox? Do I go to the bank, ask for a home equity line of credit? Do I go to my financial advisor and say, hey, I need to liquidate these stocks? Or can you go to your own private banking system, a place that
And,
you guarantee growth that you can access in a time of need?
and by the way, they are all options, right? So don't hear us saying that this is the only solution. We're trying to give you the most optimal solution. And by most optimal, we mean, would you want to have $1 doing three jobs? I say this all the time. I mean, if your answer is yes, the next question would be like, wow, Jason, Jeremy, how would I do that? How would I give $1 three jobs? Well, we're going to talk about this soon, but in the seven laws of wealth or the seven rules of wealth, however you want to look at it, the third law is uninterrupted compound interest. And there's a smart guy. I mean, he was in New Jersey for a long time, like me, smart guy, Einstein. And he said, the eighth wonder of the world, uninterrupted compound interest. Well, when you have your money growing in a money market, say you're getting that 4.5% that Jeremy mentioned earlier, when you use the funds, when you liquidate the funds, if you go back to zero, the compounding interest has been interrupted. It is no longer growing. So, with the system we're talking about through a specially engineered whole life, when you make your deposits into your liquidity account, when you make your deposits, whether it's monthly, whether it's annual, guess what happens? That money, that cash value is growing from the time it hits that account daily for the rest of your life, and it's uninterrupted and compounding, and it gets nuts later on. I'm going to stay here on the save part. So I'm talking about save right now, Jeremy. I'm going to kick it back to you before I go through the other two places. But in the save part, you have the uninterrupted compound interest. And I like to talk about this a lot. Like, have you ever heard, and if you're listening, you know the answer, so shout it out, participate, be active. But what would you rather have? A penny that doubles every day for a month? Or would you rather have $1 million? The first time you hear this, if you haven't heard this or seen this, you might say that $1 million because a penny doubling every day doesn't seem like very much until you get to day 27 or day 28, when all of a sudden that penny doubles and it exceeds $1 million. And by the end, it is far more than $1 million. Think of your whole life policy in the same way. Like when you start a kid's policy at 15 days old, by the time they're at that 27th year, you're uninterrupted. It's the wealthy grow their wealth exponentially. It is not linear. And so when you have the money coming across and all of a sudden just goes straight up, that's what it looks like when you have the element of time on your side and it's uninterrupted compound interest. So, Jeremy, any thoughts on that before I go into the second part of the giving your dollar three jobs?
No, no, I think it's beautifully said. What should be interesting for people to hear, though, is we're not talking about pennies here. Like we're talking about like true wealth generating tools that you can do within your own lifetime. To be able to have that dollar compounding inside the policy and then still there for a rainy day fund. Well, once the rainy day fund's filled up, what do? Go out and multiply your wealth through investing, which is how I use mine. But you got to start from a stable source of liquidity. And when you have that stability, that strong foundation, it allows everything else you do in terms of investing and risk, you do it from a position of strength. But go ahead, go with number two.
That's it. I mean, position of strength. That's what we're talking about. We're talking about something that's guaranteed, that you're in control of, and you're building your foundation on granite, not sand. To take it from the Bible, we're putting it on stone. The second one, number two, so you're saving your money. It's uninterrupted compound interest. Now, when you take a loan, this is where a lot of people get stuck. When you take a loan, you're borrowing against the cash value that you have deposited into your system. So whether you're doing it slowly over time or you're overfunding at the beginning, there's a lot of ways to do it. But all you're doing is you're borrowing against that money. And this started way back in 1848. So now what I'm telling you is you're saving your money uninterrupted, compounding interest that is tax free away from Uncle Sam and protected and available. And then when you take a loan, now you're spending other people's money because you're borrowing from the general fund of the insurance company And when you do that, you're paying back simple interest to your partner and you control how you pay it back. But you've already given that dollar two jobs. You are saving in one hand and you're spending the same money because you're borrowing a line of credit from the insurance company at a simple interest rate. And so that's just two jobs you give in the dollar. I'm not even going to go into all of the control you have, all of the um, flexibility you build in. But Jeremy, I saw you have something to add to this.
No, no, I was just thinking that you have not just this growth and liquidity. I mean, I just think about what the asset is in and of itself. Like we are talking about specially engineered whole life insurance and talk about protection all in one place. Talk about a true rainy day fund. If something were to happen to you, how do you take care of Patty? What is that income replacement that's over there? So when I think about the true rainy day fund, not just like while I'm alive, but also to take care of my beneficiaries after I graduate and after I move on from this plane of existence. I was just thinking about that in the back of my head as you were talking. Maybe it was my ADD brain, but truly, this is a very, very great form of emergencies, right? It covers literally every emergency that you could think of, both living and deceased because of the product of what it is.
Yeah, if you're listening, your money problems are simple. They might feel really complex, they might be really overwhelming, but they're really simple. It is how do you keep more of the money that you make? Because you most likely, if you're listening to us, you probably make plenty of money. You probably want to make more. You know, if I ask everybody, how many of you want to make more money? Everybody put your hand up. You're probably putting your hand up. But all we're saying is, why don't you control the system? Why don't you have guarantees and give $1 three jobs? So even if you don't care about what Jeremy just talked about, if you say, you know what, I'm not married. You know what, I don't have any kids. You know what, my kids can build their own wealth. Like if that's the frame of mind you're coming from, you might not be the right fit for us. But hear me out because I had this conversation this week. I've already shown you for anything that you're going to buy in your life, any major purchases, any debts that you might have already incurred because you went to Capital One or Amex or your HELOC or a line of credit or whatever it might have been. You're paying interest to somebody else. So why not bring that back to you? Or you want to do what Jeremy talked about and you want to multiply the money by doing what the banks do and making a spread on that money in that second bucket, the money you're taking a loan out. So now you're saving in one hand, you're spending, but the third job you're giving, and this is important for me, it's important for Jeremy, is you're protecting. You're saving, you're spending, and you're protecting. And you've only put money into that saving bucket. If you put it into a bank, guess what? It does one thing. It grows, you interrupt the compounding, you use it, and the money's gone forever. It will not continue to grow. So, if you don't understand anything else, if you can get that, then our phone should be lighting up. You should be wanting to talk to us. You should want to say, how do I do this? How do I get some of this in my life? I need this. But if you don't, it's okay, but just at least think about it.
Yeah. So I think the big key takeaways we start to wrap things up here is these policies they're not an investment. They're not an investment in any way, shape, or form at all. Do they have investment like properties? Yes. But this is just really a smarter way to save, and that gives your emergency access and long-term protection along the way, right? Where you also have total control when these policies, when they're designed well, when you are working with a practitioner, someone who understands how to design them for living benefits, then
Mm,
all of this comes into making the most dependable financial asset that you might actually have, the one that has the guarantees that we were just talking about. And that's going to allow you to really take on anything that life throws at you, right? But at the same time, you're also able to multiply your wealth and you're able to multiply your money with purpose. So
mm.
leave you with that thought as we kind of close things out.
And Jeremy, who I'm going to ask you two questions. You know the answer to both, so please don't get nervous. Just focus in on them for a moment. I can't believe that you have an ADD brain. You are one of the most organized. And you always say I compartmentalize, Jason, but like I admire your organization, your professionalism, your knowledge, the way that you speak about things, the integrity you bring every day. So I can't believe that you have an ADD brain, but you know, it's probably because you're brilliant, because a lot of the brilliant folks do have that. So with that compliment that I didn't expect to come out right at the moment, but two questions for you. There is one guarantee in life. What is it, Jeremy?
Change.
Yes. And are you prepared for when that change comes? And now, if you're talking about storing your what if, your rainy day fund in the banks, Jeremy, who is the number one purchaser and has
Oh,
4x the amount of whole life they've purchased since 2012, who would that be?
banks via what's called bank-owned life insurance or BOLI. So if you don't believe us, go check it out. It's worth a
Oh,
Google.
please don't believe us. Don't believe a word coming out of my mouth. Don't believe it. I want you thinking for yourself. Go research it. Go look it up. As of quarter two of last year, banks have $225 billion of this stuff. If you've ever wondered, why are there so many executive VPs and directors at a bank? Why is there a VP for opening the door, a VP for cleaning the mats, a VP for this? Because they have to have an insurable body to put this stuff on. So, Jeremy, I think we covered it. So, if you've taken anything away, go below, go check us out, book a call with us, come see how you can keep learning about this with us in other episodes. And Jeremy, as we always say, you're already in banking.
You're just not the banker yet.
There you go. See you guys next time. Be blessed.
Take care.
Thanks for joining us on WealthWise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, we're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.